Hey, this is Coach Mike from Walk On Consultants with your end of the day stock market wrap-up report. I know it's been a while. Haven't done one. I've been missing in action, but I'm back. I'm back doing my nightly reports. So today I want to talk about a stock that got hit pretty hard. I don't know if you're familiar with a stock called Oatley. It's in the alternative milk beverage category. So you probably heard of soy milk and almond milk, which is a new player, maybe not so new, but maybe new to some of you, called oat milk. I got the store brand version here uh, from Lidl, but there's an actual brand called Oatley, and they make oat milk, the plant-based alternative oat milk. Well, the stock just had an IPO back in May, I think May of this year. It was really, hot IPO. Everyone was jumping in, trying to buy the stock, and it went up, but it got hit really, really hard today. So let's take a look at why it got hit so hard. Stock fell 20% to almost 20, say call it 21% today, because they had a revenue miss. Now, although the revenue was up 49%, it was a miss on what Wall Street was expecting. So 171 million, but I believe Wall Street was expecting 186 million. So a big miss. I believe on top of that, they reduced their guidance for the fourth quarter. So that took a lot of air out of the stock, and as you can see, fell pretty hard. So big miss for Oatley today. Let's go back to when they actually IPO. So here's when they actually had the IPO. Like I said, it was up 18% in one day. Amazing, because their revenues in 2020 had doubled. So everyone was really, really hot for the stock. IPO'd at 17, but I think the first trade on the market was like 22 bucks. Yeah. Opened at 22. So IPO'd at 17, but first trade was at 22. So the question is, where do we go from here? Now that it's had its chance to have, I think this is their second quarterly report, and they haven't been doing so well. Part of that is just getting used to what Wall Street expects. It's a big difference between being a privately traded company and a publicly traded company. So Oatley's going to have to adjust to what Wall Street expects. But here's what I want to look at. What I normally look at to try to decide if I want to go into the stock or not. Because a stock that previously was at 22, now it's at 9, may be an opportunity, but it could be a trap. You know what I'm saying? It could be a trap. So let's take a look at some of the vital stats to look at. Market cap is 5.5 billion. I always look at stocks at least 1 billion or higher. So that meets my requirement there. Now take a look at volume. 29 million, and where the average volume is 2.8. So let's call it average volume 3 million, and today let's call it 30. 10 times the normal volume on a down day. That's not a good sign. That means everyone is running for the exits. 10 times the normal volume, down 21% in a day, is just huge, really, really huge. But it could be a huge buying opportunity as well. Take a look at the 52-week range. We go from 905, which today hit a new low at 905, 52-week high at $29. So maybe in a one-year target, I believe they have 13 analysts that cover this stock, and the range of the estimates is $27 a year from now. So you're looking at a potential triple if you get in now at around $9, and a year from now it goes to 27. You could triple your money. Not saying you should, but I'm saying, hey, this is the stock you should be taking a look at. If we look at a year-to-date chart, here's where the IPO back in May. Like I said, first trade was at 22 and change, although the IPO price was 17. And you can see the peak later that month, next month in June. But it was straight downhill from there, straight downhill. So do you want to catch a falling knife? Is it a good time to get in right now? According to Yahoo Finance, it's still overvalued. So there could be a lot more downside to this stock. I don't know how much more it could go, but it's at $9 now. So maybe you want to wait and see. I like to wait for some of the technical indicators to improve. I think right now the RSI is at like 26, and technically if the RSI is at 30, it's oversold. So 26 clearly is oversold. Maybe I'll take a chance and pick up a few hundred shares. Who knows? But I just wanted to give you some food for thought, or some milk for thought, right? And let me know what you think. Is this a stock that you think you want to buy, sell, or hold? That's it. My thoughts for the day. I like to keep it short. Oatley stock. Take a look at it. See how it opens tomorrow morning.